these companies, as you pointed out correctly, are generating huge cash flow. Nvidia has a value of more than all the mining companies in the world. This is the Bible of high inflationary times. And I would recommend anyone who is young to read it. I would never put a central banker in a position of responsibility in my company. I wouldn't even hire him.
Ladies and gentlemen, so today we have Marc Faber, the editor and publisher of the Gloom, Boom and Doom report. And today we will discuss the state of the US economy. We will talk about commodity sector, precious metals, portfolio structure in the current environment, and many other very interesting topics. So Marc, thank you so much for being here.
It's my pleasure, and good day to your viewers and listeners.
Thank you so much, Marc. So we have so much happening in US. What's your take, sir, on the whole economy outlook, and what are you paying attention to right now?
Well, for the last, say, 6 to 9 months, I've been arguing that the economy in the US is much weaker than the statistics would suggest, and especially the stock market would suggest, because the stock market has been going up, but industrial production is down. And we see now in the employment figures that the economy isn't doing all that well. The problem is we live in a period of monetary and fiscal stimulus. In other words, the governments in the Western world, they have huge deficits. So money flows into the economy. At the same time, we have central banks. Although they increased interest rates, they didn't tighten monetary conditions because, as you know, you could have interest rates at 30% and easy money, provided you supply sufficient liquidity into the system. Anyway, this is the condition, and under these conditions of monetary inflation, it's very difficult to measure anything because everything is unreal. You understand? It's nominal, but not real. So, as I give you an example. So the Dow Jones could be going up 10%, but if the dollar drops 15%, what is the gain? You understand? In real terms, you would have lost money. And this is happening. The market peak was probably for most stocks, I'm not saying every stock, but for most stocks, was sometimes in 2021. And then at the end of 2021, early 2022. And then the market went down meaningfully until the end of 2022. But most stocks after that have failed to make a new high. But the indices have made new highs because they're driven by the FANG and related stocks and by semiconductors. In other words, a narrow group of stocks is driving the index higher, and the majority of stocks isn't moving that much. Now, my view would be that the market, after this peak, sometimes in 21, early 22, made another high in November 2024 when Trump got elected. And thereafter, the market, yes, has been holding up, but other markets have done much better. And measured in euros and other currencies, and measured especially in gold, silver, and platinum, the market is down. In other words, with an ounce of gold today, I can buy more Dow Jones than at the beginning of the year. So we had, in real terms, actually not a favorable market. And I think this will continue because Mr. Trump is a money printer and he doesn't care about spending restraints. He will spend as much money as he likes everywhere.
Okay, that's a very interesting perspective. And sir, if we look at the interest rates and all this mess that's happening with Trump putting pressure on Powell, is that even significant? Does it matter? And would you be paying attention to that?
In the investment field, you have to pay attention to everything. But some things are important and some things aren't important. The pressure Trump and this administration is putting on the Fed, I disagree with. I think the interest rates, even at this level, is not very high and should be probably higher. But they will put pressure and they can push the Fed fund rate down, say to 1% or 0%. The bond market may not like it. The bond market has been rallying now for 3 days in a row. And I wrote about this in my newsletter because there's a huge short position in bond futures. So when the market goes up, the shorts have to cover and then it goes up more. And also, I think Americans gradually realize that their economy is actually much weaker than they had expected. And you have to understand Wall Street is a sector. That sector is never going to tell the American public things are bad because they want the public to buy anything that they place bonds, stocks, funds, everything. And that's where they make the money. And they also make the money from rising asset prices. Say, at the beginning of the year, your fund is worth $1 billion. At the end of the year, 1,200,000,000. Then the asset value is up and your fee is up. So the Wall Street will never tell the Fed to essentially cut down on money printing. They love money printing. I think the Fed, I mean, I've been criticizing the Fed for the last 40 years. So I'm ashamed to admit that for the first time in my life, I have agreed with the Fed not to cut rates. I think rates are not very high. Money isn't tight. If money was tight, the stock market would not make new highs and gold would not make new highs. That you have to understand. Rather than look at statistics, I say, look at the symptoms. The symptoms of money printing are still there. Rising commodity prices, notably rising metal prices and precious metals, and stocks at a record high, and a weakening dollar.
Yes. So we have this environment where dollar is weakening, where it looks like they will lower interest rates even lower. So what would that mean for the stock market, Mark, and for the dollar as well? But will dollar continue to decline compared to other currencies, or just stay in around the same level?
Problem of comparing the dollar to other currencies is that the other currencies are not much better. Those are paper currencies. So I wouldn't know what to tell you. But I think if I look at the dollar and I compare it to, say, precious metals, and I compare it to mining companies, I think mining companies would be relatively low compared to the dollar. So an investor could buy some sectors that are low, or he could buy oil companies. They are relatively low. But in general, I think investors should be very cautious because I wouldn't rule out the market to experience a significant setback in the next 6 months. As I said, the economy is not very good. So suddenly corporate profits could be disappointing.
Hmm. And in this environment, Mark, if we do get decline of the stock market into a weakening economy, would that be a recipe for a recession?
Well, I think most people are already in a recession because if you go to shops, there are lots of people they would like to buy this and that, but they cannot, they don't have the money because the price has gone up more than the salary increase. The salaries have gone up, say 4 or 5%, but the prices are up 12%. And the taxes are up. The tax that you pay to the government for doing nothing or for harming the economy, imposing more regulation.
Hmm. And so Mark, would you have an outlook for the real estate market as well? I think I was looking at the recent real estate data, and it looks like market was frozen for a while, but now the sellers, there are more sellers than buyers. So at the current valuation, this also looks quite shaky.
Well, as the stock market, the real estate market is very fragmented. You know, there's real estate in Europe, there's real estate in Ireland, there's real estate in the US, in Brazil, in Asia, and so forth. So in some markets, prices have gone down considerably and are bottoming out. And I always tell people the argument of people who buy stocks is that with money printing, stocks will always go up. Okay, to some extent, I can agree with that statement, except with money printing, real estate didn't go up, commercial real estate. In America, commercial real estate in New York, Boston, Baltimore, Chicago, San Francisco, Los Angeles, wherever is down maybe, 50% from the peak. They're buildings, you cannot use them anymore. Finished. They're selling at a 90% discount to their valuation of 4 years ago. So money printing doesn't help all the time. That is the difficulty when you're navigating through monetary inflation, that not all sectors move up. Sometimes this sector, or if you are in a room, you could say sometimes this corner of the room will inflate, other times that corner of the room will inflate. It's very tricky. It's not so easy. And I think what you touched upon, the commercial real estate market in America is down substantially. The residential has just started to go down. And in some cities like Oakland and Austin, the prices are down 20% from the peak 2 years ago. But they'll go lower.
Hmm. And I was looking at the chart recently, Mark, where I was looking at the prices of real estate in US compared to measured in gold in 1970s and today. And they're actually cheaper right now than they were back then, which is yes, which is very interesting. And again, it shows the value of fiat. And so, Mark, I would like to move to gold. At the current levels, after gold has performed so much, what would you expect the price of gold to do for the next 12 months with the current dynamics?
Yes, I wished I knew. I wished I knew where the stock market will be in 12 months. I wished I knew if there's a peace agreement between Russia and Europe and the US. And I wished I knew whether there's an earthquake where I live or not. And I wished I knew how many bottles of whiskey I will drink in the next 12 months. But this I all don't know. My expectation is that The gold price, as you pointed out, is not cheap at this level. But the people in the world don't own gold. Very few people have, say, 10% of their money in gold. The majority of investors, they have no gold because they sold it already. And because it never corrected, they never bought it back. And if you take all the gold in the world and you measure the population grows, the population in China and India and so forth that has become middle class that can buy gold, and then you measure all the paper money in the gold in the world, then I think that maybe gold is not really expensive. So my advice to people, and believe me, my advice is very consistent. For the last 40 years, I've been telling people, put some of your money in gold and silver and platinum. Not all, but some. My asset allocation suggests put 25% of your money in gold. And I do it not by just buying 25% of my money in gold, but I buy every month. And I've done that for the last 40 years.
Hmm. Yes, I've been doing quite similar for the past few years as well, Mark. And what's interesting, I was telling this story before that I don't think I've met a real person in real life who talked to me about gold, which is a good sign. None of my friends care, none of my family cares, and especially the mining stocks. So that's a good contrarian indicator as well, that at least the masses are still certainly not involved. And so, Mark, I would
They're
like,
embarrassed to talk about it because they all dabble in bitcoins and other cryptos, and they never bought gold or they sold it. I mean, if you go to a bar or they talk about anything, but not gold. I agree with you.
yes. And so just to touch on the mining stocks, Mark, um, I was looking at some of the big players in the gold and silver space, and they're doing really well from the free cash flow perspective. The balance sheets look good, even at the current gold price. So I think before, when I would be getting involved with these stocks, I would buy because I believe that the commodity price will do well. But at the current valuations, I believe we don't really need that anymore. So would you find them really attractive from that perspective as well?
In general, I prefer physical gold, silver, and platinum. But at the beginning of this year, I turned more optimistic about the mining stocks because they were incredibly inexpensive compared to the price of gold. The price of gold had gone up and the mining stocks hadn't moved up. But now they have moved up considerably, but they're still not expensive. I mean, you can buy Newmont and Barrick, provided the gold price doesn't collapse. These companies, as you pointed out correctly, are generating huge cash flow because their all-inclusive cost is maybe $1,500 per ounce, and they can sell it for more than 3,000.
Yes, it's certainly. And Mark, so uh, I'm not sure if you talk about things like that, but would there be a certain stage on the mining curve that you could be more interested in, or would it be the big companies that you would buy?
I think my approach to investments is to be diversified. So I mean, my major exposure is physical. I want to point this out. It's not going to change. But I have a large exposure to mining companies at the moment. because I think they are undervalued. And the financial institutions, they are managed by mostly dumb people. They are really bureaucrats, the compliance department tells them to do things, and then the trustees of the pension funds tell them to do things. They are really bureaucrats who listen to other people, the very few independent thinkers. So these people, their exposure to gold and mining companies is next to nothing. Nvidia has a value of more than all the mining companies in the world. So I'm telling you, my view is one day the pension fund consultants and these compliance people and whatnot, they will go to the fund manager and tell them, what is your exposure to mining companies? And they say nothing or 1%. Then they tell them you have to increase it to 5%. So if the fund management industry in the world increases the holding of portfolio to say 5% precious metals, the price will go ballistic.
Yes,
But
that's
it may happen and it may not happen. I'm telling everybody, you have to know what risk profile you can be. You understand? You want to have high risk and maybe sleepless nights, or you want to be sleeping well and be diversified, up to you. Everybody has to decide himself what is best for him.
that's a very good point, Mark. Thanks for that. So I would like to ask you about some of the other commodities like copper, like uranium. Would you be interested in these?
Occasionally, I buy these commodities. And in the case of copper, I think that copper producers, the mining companies, are not expensive. But look, I want to reiterate what I said earlier. In monetary inflation, it is very difficult to say something is good value and something is not good value. So we have to try to find what is relatively attractive. I mean, I take Nvidia and the FANG-related stocks, say 7 stocks, and I compare their market cap. As a percent of the S&P, it's over 30% now. I take the mining companies, all the mining companies in the world, and the oil companies is around 5%. So I'm not saying that the mining companies and oil will necessarily go up, but maybe they go down less than other stocks if things go bad. Do you understand? I think the investors should not only think of things going up, they should think of what happens when things go down. Because we are in an asset bubble. And this asset bubble one day will deflate.
Hmm. And so just Mark, on the portfolio structure, we mentioned it already. So with gold, with miners, but I would just like to, and of course that depends on the individual as well, but what advice would you have on portfolio structure in the current environment? Would it be a certain amount of cash on the side? Would it be emerging markets possibly? What would your
Yes,
thoughts be?
yes, of course, some cash. But I can't say that cash is 100% safe. If you have to go to jail for 10 years and you ask to invest for 10 years, but you cannot change the asset allocation. So if you put everything into cash, maybe you come out in 10 years' time, the cash is worthless, no value. So you understand, we have to be very careful what we recommend, and each person has a different strategy, as I tried to explain. I would own some, as I mentioned, precious metals. I would own some bonds and cash. I would own some shares, and I would own some real estate. So I'm reasonably well covered. Now I have to diversify in the world where I own all these things, because maybe one country goes sour. So I may have to have, like, I like Latin America. I think in a global chaotic situation, Latin America would be relatively fa favorably positioned.
Mhm. And Mark, you mentioned bonds. Would it be short-term or long-term bonds?
Well, at the moment, the long-term bonds are attractive, uh, but the bond market rally may last for a week and it's over. You understand? We have more volatility, and but in general, people, if you ask people, what do you invest? You mentioned nobody talks about gold. Agree. But I have not met anyone who buys bonds. You understand? That is out of the question. They all talk about inflation. Yes, I agree with inflation. But you understand, inflation can be interrupted by brief periods of price declines in recessions until the next monetary injection occurs. So that's why I have bond positions at the present time.
Mhm.
Now, of course, some of your viewers will say he's crazy. Yeah, maybe. But in investments, sometimes you have to do things in which you don't believe. Yes, you understand. I think bonds long term are bad because the interest rates, in my view, on bonds will go over 10%, maybe 20% in the long run. But for the next 3 months, I think interest rates can go down.
Mhm. Yeah, that's a very interesting perspective, but I totally get it. And Mark, I like to ask this question for the younger audience. If we have an individual who's still at the beginning of his and her wealth building path, what advice would you have for that person with everything that's happening and all the madness so that they don't make too many mistakes and don't get burnt too much?
I would tell him, have many girlfriends, go drinking at night, and enjoy your life, because as you age, this will be reduced. And when you work, then you work. You understand? You can't say, oh, I have a headache and this and that. You have to be disciplined and focused on your work. And you have to ask yourself always the question, do I provide something positive for society or not? Or in a company, I am useful to the company or I'm just a cost? Because if you're the cost, you're going to lose your job one day because the company will cut costs. But the guy who brings in money, say he acquires new clients and he covers the clients and the company gets income, commission income or fee income. Such a person is useful. So these are things I would think when I'm young. And I did think about it. I mean, I always looked that I was profitable for the company I worked for.
Mm.
And then I started my own business. But I didn't start my business right away. First, I worked for two companies, American investment banks, for 20 years altogether, 1970 to 1990. Then I started my business because you need some experience and it's easier to start the business if you know how to make money, where the money is, because the client, he doesn't see where the company makes the money.
Mm. That's a very good advice. Thanks for that, Mark. And what was the best advice that you received when you were at the beginning of your building path that had the most amount of influence on your investing career? Or
Well, I mean, in 1980, when inflation was very high, stocks were very cheap. But I hadn't realized how cheap they were until a man, he told me, Mark, the stock market in the US, inflation adjusted, is down close to 80% from the peak in 1964 and 1966. And Mark, you must read this book. It's called The Economics of Inflation. And it describes what happens during monetary inflation. Can you see it?
yes.
Okay. Because during monetary inflation, the big changes in society and in the structure of industries, there's a concentration of wealth, a concentration of corporate power, and so forth. And what happens to the currency, and what happens to the currency vis-a-vis gold, and what happens to society, and so forth and so on. This is the Bible of high inflationary times. And I would recommend anyone who is young to read it and to study it and not put it aside, but to read it again every year to remind him about the evil of central banks. They are thieves. They are abusing the system, and they work for the rich people and against the masses. The average person suffers under monetary inflation, whereas people with assets like me, who are beneficiaries. Do you understand? I do not complain. I complain as an economist, but as an investor, of course, money printing is good for me. It's good until people are so impoverished, they come with the forks, like the communists came after you and took the land from the farmers. The farmers have never done anything bad. But what happened? The communists came and took everything away.
Yes.
That is the consequence of money printing.
And Mark, would you say, so we have in, like, everywhere we have cycles, the winter, the summer, and similarly with the employment cycle, we should have good times, bad times, efficient allocation of capital, inefficient. And the way Fed is trying to remove, do they believe they're doing the right thing, or that's actually part of their plan to do whatever they're doing?
Look, they are academics and they never worked a day in their lives in the private sector. You understand? And they have modern theories. And in their book, they can probably avoid cycles, which is a fallacy. They will make the cycles worse. And my opinion is I would never put a central banker in a position of responsibility in my company. I wouldn't even hire him as a cleaner. I wouldn't hire him as a driver. They are useless in practical terms, in common sense. They are very good at writing papers and talking nonsense. And the audience is Wall Street. They love to hear this bullshit and don't consider and do not question the central bankers about their true intentions. But clearly, I think they have caused the housing crisis in 2008, 2009, and they're going to cause again a huge crisis Believe me, it's a question of time. They can then print money and more money, and then the currency goes down and so forth. You will see, it's not going to be pleasant. Whatever outcome I look at, and I look at all the possibilities, I don't see any possibility of the end leading to prosperity. Before we go into prosperity, we'll go into, as you pointed out, a business down cycle, the Kondratiev down wave with crisis and wealth destruction. That's what I say. You should consider when you invest money, in what will I lose the least money? Not in what will I make the most. How do I lose the least? And on these optimistic remarks, I will slowly leave you
Mark,
because I'm a working man. I have to work.
yes, Mark, it was a pleasure having you on. Thank you very much for your time, and I hope to have you back, sir.
Well, I hope we see each other again. And thank you very much for your time and your interview. And I wish your viewers and listeners all the best. Thank you.